Okay, I talked about how Germany is doing badly, but now I want to look at how the world economy as a whole is sort of doing badly right now. So I brought this article up from the New York Times, and it's global economic trouble is brewing, and the trade war is only part of it. So I think they're going to go into multiple facets about what's happening to the global economy right now. So let's see what they have to say and if it's interesting. A clear signal from the bond market that investors are pessimistic about the economy's longer-term prospects. In a span of less than 24 hours, developments in Washington and Wall Street have sent a vivid message. The world is ambling toward an economic morass of the sort that no mere presidential tweet can fix. On Tuesday, Trump blinked in the trade war with China, retreating from previous plans to apply tariffs to virtually all Chinese goods on September 1st. The action ensured that American buyers of Chinese-made toys, smartphones, and more won't face tariff-boosted prices this holiday season. Huzzah, said the stock market. The trade war is de-escalating. Christmas is saved. The S&P 500 rose 1.5% to a level only about 3% below its recorded high on July 29th. The bond market wasn't quite so buoyant, while longer-term treasury yields rose, reflecting more optimism. The increase was slight, and they remained far below their levels of late July. On Wednesday, the signal sent by the bond market worsened further. The yield on a 10-year bonds plunged to 1.59% by the end of trading. At some points, the rate fell even below the equivalent rates on 2-year bonds. So that means that the yield curve is inverted, which means that the rates on longer-term bonds are lower than shorter-term bonds, which is against what you'd think common sense says should be happening, because there's more risk over a longer-term period, because over a longer period of time, there's just more that can happen, and it's harder to see what's going to happen, so there's just more risk. So investors would demand more compensation for that. In addition to investors just demanding more compensation for simply waiting longer periods of time, because it's harder to wait longer than shorter periods of time, which is obvious. Not to mention, inflation's probably going to be around 2% over that period, so that means that investors are losing money in real terms on their 10-year bonds, which is a shift from earlier when yields were much higher a few months ago. That is called an inverted yield curve, and it's a sign that bond investors foresee weak growth and lower inflation in years ahead, and expect the Federal Reserve will respond by cutting interest rates. An inverted yield curve has often been a harbinger of recession, though not a guarantee of one. That pessimistic signal from the bond market in turn prompted a sell-off in stocks Wednesday, reversing Tuesday's gains. This series of events does not bode well for the world economy. In this August of market turbulence, the shorthand explanation has been that it is a result of the trade war. That is true as far as it goes, but the shift in the bond market since late July, and especially on Wednesday, signals something bigger is going on. The trade war is just a piece of it. So, this is where we get into the really interesting analysis that this article might have. Sure, forestalling the latest Chinese tariffs will help avoid a big hit to the profits of retailers and importers over the next few months, and that helps prevent American consumers from facing sticker shock during their holiday shopping. But this is about something more consequential than a 10% tariff on iPhones. It's really about the widening schism between the world's two largest economies, one that cannot be reversed with a concession on tariffs by the president or with some soybean purchases by the Chinese. This class is increasingly becoming part of the landscape that every global business must navigate. The same could be said about the other geopolitical fires that risk flaring up. What will be the future of Hong Kong as China responds to pro-democracy protesters there? Will Britain leave the European Union on October 31st as planned? And on what terms? Can India and Pakistan avoid a devastating conflict over Kashmir? Well, so far they've been doing that over the past 40 years. Oh, and the European economy may be heading toward recession. Global central banks are largely at the end of the road in terms of what they can do to offset a new slump, Yeah, interest rates are like already at zero almost everywhere, at least in the developed world. And there is political dysfunction in many of the world's biggest democracies that could limit their ability to respond to a new recession with fiscal policy or other tools. If you're a corporate CEO making investment decisions, the environment in which you operate is shifting beneath your feet. Even with a seemingly bottomless supply of cheap capital available and very low corporate tax rate, it feels awfully risky out there. And indeed, though, the first half of the year, falling business investment was a drag on the economic growth. The latest developments don't mean that a recession or even a severe slowdown is a certainty. The Federal Reserve, unlike its counterparts in other major economies, still has some room to cut interest rates to try to stimulate activity, and has shown it is willing to use that power. And American consumers have proved quite resilient this year, even as business spending has stumbled. Perhaps that will remain true. Yeah, America is still doing much better than the rest of the world right now, even if it's taking a teeny bit of an impact from the bad economic news from around the world. But events this month signal that the problems facing the world economy are more complex and intractable than the immediate reaction to President Trump's trade war de-escalation might suggest. A tactical retreat here and there won't solve the deeper problems hanging over the world economy. Once chaos has been unleashed into the global economic system, it can be hard to reel back in. So he's basically saying that the trade war isn't the be-all end-all of the global economic troubles, and that there are deeper issues in Europe, China, and elsewhere that are causing the world economy in general, and those regional economies in particular, to be having a big hit right now. I mean, there wasn't quite as much as I thought there might be in this article, but it's still interesting to have like a take on how the global economy's doing. I guess that's all I can think to say at the moment. So, I hope you enjoyed this feel for like the global economy as a whole. I guess the most important thing to take away is that the US economy is doing a lot better than the rest of the world right now, which has been the pattern consistently since the Euro crisis began around 2011. Please share this video with anyone you think might be interested in it. Like this video, comment, subscribe to my channel, hit the notification bell.